So welcome to the first of a two-part webinar series on actuarial techniques to help you better understand risk and opportunity. The second webinar will be held on February 7th, and a registration link will be sent to you as an attendee later today. If you have any questions during our webinar today, for our speakers, please use the Q&A box on your screen to submit your questions. Also, please note that the webinar is being recorded and will be available for access from the IAA website tomorrow. Our speakers today are Jules Gribble, Henry Yan, Eamon Kelly, and I will hand over to Jules, who will be moderating this session. Jules?
Thank you all for joining this webinar. As Christian mentioned, this is the first of two webinars. We want to take you on a journey and hopefully leave you with some new insights and tools that you can then use. A word of welcome and comfort for our friends who are not actuaries. While we've used actuarial concepts in developing the material and the tool, we trust it will be accessible to everybody. There aren't any formulas you need to deal with, and the key ideas are widely known and used in many areas, so just used a little bit differently here. You don't need to be an actuary or have an actuarial background to get benefit from this work. I am Jules Gribble, and I'm the moderator for the webinar. We have two excellent presenters who've both been key contributors to this work. Henry Yan is an experienced actuary who has worked in many countries, and Eamon Kelly also brings broad experience and geographical diversity to the work. This work has been done in conjunction with the IAIS, and I was the link person for the project. Next slide, please. The following slide summarizes the webinar structure, which is pretty straightforward. After I finish this introduction, Henry will do a presentation, and then Eamon, and then we will have questions after that. And please ask the questions as we go, and we'll address them as we go if we can do that. The next slide talks about managing risk. And risk doesn't go away, but it can be better understood and managed. And this applies to both downside risks and upside risks. The paper and tool build on the established concept of heat maps, sometimes called risk matrices, and the tool provides a process to help you assess where on the heat map you are. If the outcome is within your risk appetite, that is, you like it and you're comfortable with it, then you maybe go on and do other things. If, on the other hand, it's on the outside of your risk tolerance, so you're not comfortable, then the structured process helps you mitigate aspects of the risk until hopefully you can become comfortable. The steps can all be done based on your knowledge and experience and do not need complex models or precise numbers. And the next slide talks about additional information, and really this is to highlight to you that the tool, the paper, which describes what's going on, the tool, which is the spreadsheet we'll see, and some worked examples are available from the IAA website, and the links are given at the bottom of this slide and also in the webinar description. We encourage you to download them and read them, and if you have questions, to let us know. The next slide talks about an overview of the process, and whilst there are a number of pictures there are two key things here to note, and the rest will be described by Henry and Eamon. The first is this is a cyclic process, as illustrated by the feedback loop at the bottom. And that means that you use the tool, evaluate the outcomes, and then go back and adjust mitigating risks as needed. So you use it in a repeat manner. The second is that the tool does not magically provide the answer. This is described in more detail in the paper, but what the tool does do is give you a structured input to be taken forward into a wider decision-making process. And for that, notice the box on the left, which is make informed business decisions. That's the decision-making process. And this decision-making process is critical as it's where your professional judgment is applied and other constraints than those considered by the tool are taken into account. And just to emphasize this point, whilst what the tool does is very valuable, an anti-decision-making process is likely to be a good recipe for disaster. We look at two key things as we go through this: product risk and provider risk. For each, we identify components and assess how well they are addressed and their risks are mitigated. We then bring together these pieces by first making an overall assessment of each of product risk and provider risk, and using the heat map to assess the overall risk from the two of those sources. We then see if we like the outcome or not, depending on how the feedback loop goes. The final slide here summarizes the particular steps taken in the process. Can you move the slide on, please, Henry?
Yes, this is the step slide.
I want slide 7, that one.
Yes.
So this summarizes the specific steps we take to implement or operationalize the high-level process I've just discussed. These are all talked about more in the paper that's available on the IAA website. Henry will take you through this process in more detail in a moment. After that, Emma will share a live experience of applying the processes. So one last reminder is to send your questions as we go along. We're pleased to get questions as they encourage us with your interests and reactions. And now over to you, Henry.
Thank you, Jules. So let me try to work with the technology we have. It's very good, but we're just trying to make sure it works properly. So let me just go back to some basics here. Firstly, can you see that this? Hopefully everybody can see the spreadsheet on the screen. Well, let's go back to basics a bit. So what is this about? We've spent the last couple of years trying to develop a tool that we think will be able to help you, those of you working in developing insurance markets, to help manage risk and see the opportunity from there. So let's go back to the basics. So let's take an example where you might want to launch a new product, a new microinsurance product or inclusive insurance product, and you have partners to help you. You're an insurance business, but you don't necessarily have the background in inclusive or microinsurance. So you need to want to understand what are the issues and risks with the product and how do you manage those risks. And then for your own operations, which we call the provider, and the provider can be your own insurance operations. It can be the relationships you have with outsiders, with other firms that you've outsourced work to. It might be a microfinance firm, for example, if they're your distribution arm, or other types of distributors. So we focus on those two things. What is the product you're trying to deal with? What is the provider or relationship of providers that you have? And then they're called steps 1 and step 2. Step 3 is to say, well, if we have those, let's look at everything all together. And we call this the holistic assessment. And then once we've done that, we move to step 4. Step 4 is the what are these skills that you will need to manage the risks of the product and from the provider. So one question that I just saw was, well, what does holistic mean? In this sense, what we're trying to say is that if you are an insurance provider trying to develop or market a new product and operate a product, or indeed if you have a product that you've been operating a while but it has issues or risks attached, the holistic means that you look into the step 1 assessment. After that, step 2, which I will talk more about in a moment. And then holistically, you bring those two together to understand as a whole, what are the key issues you have to manage in terms of the product itself, and then to operate the product and deliver it to customers. So don't forget that the customer is key here, and we're trying to make sure that the product and the provider operations make sense for the customer. So those are steps 1 to 4. And then you review all of those. And then, as Jules mentioned, if you need to, you look through the feedback loop to see what needs to be adjusted until holistically it makes sense and is at an acceptable level of risk. So we're looking at risk, opportunity, managing the risk, making some decisions on, assessing what skills you need to manage those risks, making some decisions, and then going through that cycle again. The way the tool is set up is is for you to be able to use it without instruction. So there is the paper. The tool is available. There's a spreadsheet tool. So what I'm showing you on screen now is available for you to use. The paper sits alongside it. The paper is more of a how-to guide for the tool. But indeed, you could try using the tool as you watch this webcast or even afterwards, and then you could read the paper afterwards. So the first tab of this, the spreadsheet, is some user guides. I won't go through those. Instead, I will talk you through it. And this steps, let me just take you to the first one. So each of these is a link. Each of these steps underlined. And what it'll do is it will take you to the product that we're looking at. Let me just go here. Okay, so this takes you to the first one, which is step 1A, product risk assessment. So the first thing you'll see is on the left-hand side, going down the page, a series of product features. So these are the key things that you need to think about in broad areas. So the first one is client awareness and understanding. The sum insurance, the insured event, the type of data that you will need for the product. What are the product features? So all of these are what we call general categories or features related to a product, and there are about 10 of them. We class these into general features that you then look at as a whole. What we then do is to say that for each of these product features, we need to figure out, well, what are the most, how risky or how important is that area to what we're trying to do? And it says here, you'll see, fill in this column first. Hopefully it comes up. And then you assign a weight. So if, for example, the client insurance or product understanding is very high. So say we're marketing to a new client base and it's a new product that they're not familiar with. So the risk weight that we give to that feature is a high risk weight. These are quite subjective, relatively simple to fill out. Going down the list, you can then look at each one and try to determine in a relative sense what is important and what is not. Once we fill all of these out, which I'm not going to complete all of, it will give you some of these scores in the next column to give you the overall risk weights and relative risk weights, as we call them, which is what the percentages are. So the risk weights are about how important is that risk to you in terms of the product. Some will be more important than others. Then what we do, and this is a separate idea, is to say, well, what is the risk score? So what is our assessment of what that risk is? So it's not how important, but how risky is that item for us? So for example, if we don't have a good capacity to manage a client's understanding of that, then we would say, yes, it's a risky score. The higher the score, the higher the risk. You'll see these are all color-coded to help you along. So say the sum insured, let's give an example. So say the sum insured is quite low, then that's not so much of a risk, and it comes out green, and so on. Let's say the data, we don't have much data, and it's an important issue, then it will be a high-risk item. What about fraud? If the fraud is a low risk, then we say, well, okay, we'll give it a green, a low score. Once you do all of this, it will generate a score down the bottom, which is a weighted risk score, which takes into account the risks involved and your perception of the risks. And when you come to that, it will give you this risk score. It's unfinished here, but let's assume that the risk score is 2.07. And this is just a way to give a relative score to the risks that you have. Well, in this case, and we haven't finished this one, you could say that overall we have a medium risk. Let me talk a bit about the scoring system. The scoring system is a little bit subjective, but it's your idea of how that risk sits within your situation. We'll go through an example today. Later, Eamon will go through that. And then again, in the next webinar, we'll go through some more examples so you'll see how the scoring is used in practice. I think I'll leave it here just to say that the scoring is your idea of how risky that item is. And it may be your ability to manage that risk. I think for here, if for an inclusive insurance product, if it were a new product and you're not familiar with that market, then we would say it's a high risk. And other situations like, for example, if there's a low risk of fraud, then it would be a low risk. The other comment was the risk weights. So the question about the risk weights, well, what we're doing is in column D, we're saying these are the types of risks that we have. And this might be high risk for the product understanding, but a low risk, it might be a high risk for in terms of developing the product features because we're not familiar with these products, but it might be a product where there is low risk in terms of the frequency. So what these do is you put these all together and it will generate percentages. So this tells us that overall, the risks are relatively evenly weighted between 1, 2, and 4, but the insured event is not so much a risk. Let me keep going, but I think this will become clear as we go through the examples. What we're trying to do here is just go through the understanding. Down the bottom, there are two links. You either can go back to the first page, or from there you can actually go back to the links will take you to the next page. So here we went through step 1A, product risk. We'll now go through the second step, which is the services. So once you've generated the score from the previous page, it will tell you some ideas of the services you need to think about to manage those risks. And those services are color-coded based on the risk that you assessed. The next column says that, well, based on these things, you need to think about what is most important for you in this circumstance. So, for example, if this is a new product in a new market, we're not familiar with the client base, then we need to do some institutional understanding of our ability to deliver this product. We might need to do market research. So this could be, say, services to understand the client market better. Column H is an idea of suggested services. The next column is really think about what is most relevant for you based on what there is. And column H is a guide to help you get there. So you fill all of this out based on the list of services. I'll keep going so that we don't run out of time, and then we can go through this again in the examples. So go through the next step. So just as we did with a product feature, we think about from the provider point of view. And as I said, the provider can be you as an insurance organization. It can be you as a collection of partners who come together to provide the product, each with a different role. And again, there are different provider areas. Obviously, in an insurance organization or a provider's as a whole, there are many, many different areas. Because we're looking at this holistically to understand what are the key issues, using the tool as a way to understand the issues and how to manage them, we divide up these areas into 7. We call them the product design capabilities. So can our organization design the product? Sales, marketing, consumer education. So this is how well do we understand, how well are we able to manage our services to sell to collect premiums and to work with the target customer market. Customer administration, are we geared up to work with this client base? For example, if they're in rural areas, how are we going to deal with that? Is this a risky item for us? Technical insurance management, all of those things that you as an insurance provider need. Operations is more of you as a business. Are you able to operate your business efficiently and properly, or are there weaknesses there? Staffing, do you have the right staff? Do they have the right skills? And number 7, lastly, is just what other things would be relevant to you. So again, we go down the column in blue. Just a reminder, the blue areas are where you fill them in. The white areas are automatically generated. So that's the guide to help you. So say, for example, we're not familiar with this product or this market. We might put a high score on that. And again, for sales and marketing, we might put a medium score. But let's say we have a good business and we know how to run insurance. We might say, well, that's a low risk area for us because we are familiar with insurance and we know how to manage it. So I put a low risk for that. And again, once you do all of that, it will generate relative scores and weights for you. I know the webcast is taking time as I make changes to it, so sorry, but if some of the pictures are a little bit blurry for you. Afterwards, you can play with the tool and see how it works just as I'm using it. Again, for the provider areas, you then assess put a score on similar to the product feature to the product areas. So say this is a big risk for us because we don't understand how, or we don't have enough knowledge on how to design this, then it's a risky area. But let's say we have good marketing administration, then please you might give that a low risk score. Once you do all of that, again, you'll get a risk score down the bottom. This is incomplete, so it's not quite there. So that will give you the risk score from the provider point of view. I know that some of you so far have been submitting questions. Thank you for that. It helps me to see whether or not you're understanding it. But so that's really great. So we put that together. The next stage is, again, we say for these product provider areas, then we say, well, what are the services that we need to manage these risks in these provider areas? There are suggestions here. And then again, you might look at what services that I need based on the suggestions in the tool. We'll talk a bit in a moment about how to prioritize services, but this is just a systematic way for you to think about all of the different areas. And as you go through the process, you'll be able to think about specific items. Right, so let me go back. I'm going to start to move a bit faster because of time, but then I will come back to with examples. So we've done step 1, we've done step 2. We'll go to step 3, which is the holistic assessment. So this is where it's a little bit different. We say we have the provider risk. We have the product risk up the top. So let's say we have a relatively high risk for your product in the orange, and then on the vertical, you will see the provider risk. And again, you put that score, and that will give you an overall score in a heat map that, as Jules said. You'll see that a low, let me give you an idea of what these colors mean. So green is good, red is not so good, and then it's like a traffic light system. So if you have a low product risk and you have low provider risk, so say it's a product that you're comfortable with, you have the operations, you understand the client base, then you will have low risks overall. And that's where you want to be, because the lower the risk, the better you understand the risk, and the more you're able to take of the opportunities. So ideally get to the green, but in the real world, we can be anywhere on this heat map. If you're in the red, red is obviously not a good area to be because it means there are high risks with the product or in terms of the operations. And if you're in the red area, basically what we want you to do is to think about why you are there, what services you can undertake, or what you need to revise that, and the feedback loop happens. So the tool will automatically generate a risk score for you. Then you'll be asked a series of questions on do you agree with that risk assessment? Are there other things you need to think about internally or externally? What are they? And this will be specific to your situation. So say, for example, I might say, well, I don't agree with this, but then you can say why you don't agree. Or yes, I agree that the tool, it reflects well what I want to do. And again, are there other factors internally or externally? So there might be other factors. It might be I don't have the management support, or I don't have that technology, or costs are an issue, or we don't have actuarial skills. So you think about all of those, and then once you've done that process, you can you can manually say, well, where do I think I should be in reality? And this is the step to help you with that. So this is so we've assessed the risks, and we've looked at the services that we can undertake to manage those risks. Now what we'll do is, this is incomplete, but you saw before I gave an example of the services. This sheet 3B will then automatically generate the services that you need to manage those risks. And then what you need to do is select the high priority services. Line 5 you see there. Select the services that you need and are most priority. And this is where it starts to be a judgment, a discussion, an analytical process. The tool so far is to help you get there, but from here on, it's thinking about the issues and how to address them. Yeah, so one question is this just for one person or is this an organization? I think this is a discussion that you need to have within your organization to figure out what is high priority, what can be done, what needs to be done first, what's the most important, how do we do that? Obviously, you may not have all the answers. The tool is there then to help figure out, well, based on the services that I need and the risks that I have, what are the skills that I need? And this is an actuarial skills assessment, we'll call it. It doesn't need to be an actuary that provides the services or has the skills. But based on the level of risk involved, if you had a low overall risk, then perhaps you need some technical insurance services, but not necessarily actuarial. And as you go up the chain, you'll need more skills or more experience to be able to manage those risks. So this is a way of bridging from risk to the services in the last page. This page is about what skills you need to address those services. It's holistic in the sense that we're trying to look at this overall. But again, like Jules said, this doesn't provide you with all the answers. Instead, it provides you with the mechanism, the tools, the thought processes to go through that. And then lastly is decision-making process. We can say, well, more work needed on product development, for example, or not yet ready to release product to market, as an example. So the tool, please play around with it after the call. The last page is some glossary definitions to help you to figure out what these technical terms mean. So I know I've covered it very quickly. What we'll do now is I will now move to pass it to Eamon, and he will describe an example that we'll go through on a specific product and a specific case, and you'll get to see how this how this actually worked in a real case. So this was a real case. The tool wasn't used at the time, but what we did do is use the tool to map out how we would have analyzed the risk. So I'll pass it to Eamon now.
Thanks, Henry. Yes, so as Henry's gone through the theory behind the tool, what I'll show you now is a practical example of that. So if we go to tab 1A.
Eamon, this is Christian. Can you speak up just a little bit, please?
Sure. Okay.
Thank you.
So this example was a real life situation where we were working on a new product for a microfinance institution based in the Middle East, and this was the first time this microfinance institution was going to launch this product with a composite credit life and hospital cash product, and also with an insurer who had not done this kind of product before, was not familiar with microinsurance, and also in a market where there was very little existing microinsurance. So in some senses new all around for everybody. So in this situation, and so that's kind of the background to it. So looking at the product aspects, the key features around the product. As Henry was explaining, there's two stages. The first one is to apply a risk weight to each of the different product features. And as Henry had said, the risk weights are really saying how important is this risk for a successful product launch in this situation. How important is this to making this product successful? So not everything can be highly important. Some will be less important than others. So at the beginning, we apply these risk weights. And in this situation here, client insurance awareness and product understanding, the first one, was had a high risk weight because that's really, really important in terms of making this product work. Having a valuable sum assured and making it easy to pay was also highly important. So that's number 2 there. Number 7 was fraud potential. So what is the potential for fraud? And if we have high fraud, will this impact on the successful launch of this product? And this was one of the points that came through in a lot of the discussions with the insurance company. Was a big concern for them because it was the first time doing this, and some cultural issues made them highly concerned about the risk of fraud. That if there was high fraud levels, then this would destroy the product and it wouldn't work. So there's a couple of key things like that. And what's useful about the tool is when you go through each of the product features one by one, and you ask yourself the question, how important is this to make this product successful? And you hopefully quickly come to identify 3 or 4 really, really important issues. So that's the first step. Then the next one is then, okay, we figured out what are the really more important ones or less important ones than others. Then the second thing is what do you think will happen in practice? And how much does this feature pose a risk, and can I manage this risk? So this is the risk score. This is applying a risk score. And you might have a product feature which is a high risk weight, but it may not necessarily always have a high risk score. It depends on the situation. So in this situation here, the first one, client insurance awareness and product understanding, had a high risk weight, but also had a high risk score. And the reason why we give it a high risk score was, and you'll see in the comments on the right hand side, the client awareness of an understanding of insurance was very, very low. This was the first time this client base was actually being exposed to insurance. So if the product was, if they had a poor experience of the product, if it wasn't clear, was seen as too expensive, or claims weren't paid quickly, claims process was too complicated, then this would very easily damage the reputation of the distributor, the microfinance institution, and general perceptions about the product and perceptions about insurance in general. And you'll see that that's often quite an issue in inclusive insurance or microinsurance when we're doing it for the first time in a new market or launching a new product. Client awareness and client understanding is extremely important. And then if I go down to number 4, you see data availability, quality, and suitability. That had a moderate risk weight, but it had a high risk score at 4. And the main reason was we had no experience data. We had some mortality data based on live tables, but we had no mortality data for this client base. and we had no morbidity data for this client base, so we had to rely on sort of mortality for sort of a different type of population, and we also had to rely on some aggregate mortality morbidity statistics, you know, inpatient frequency and length of stay and so on. So the level of data availability was quite limited, and this is also quite a common issue. Also now fraud potential. So fraud potential had a high risk weight and also had a high risk score. Because anecdotally there were you know, high levels of corruption and a high potential for fraud. So this quickly tells you sort of where the areas are to be concerned about. And overall, we see the bottom, the overall score of 3.14. Which is in the red box, so it's quite significant. It's a high risk product, and this is was actually an accurate reflection of the risk. It's a new product for the organisation, the first time it's entered into this market, the first time for the microfinance institution, the first time for the insurance company, and for the client himself also a first time. So if we go to 1B. So if we just, this then tells you where, what type of services you might need to try and address these risks. And if we look at the ones in red, ones which had a high risk score, we see for the first one, client insurance awareness, product understanding. The key things there that we could look at is assessing the institutional capacity to operate with and work with this client base. The other one was fraud potential, number 7. And the services that we choose there was fraud risk, fraud identification, and fraud management are really important. So we need to make sure we develop a fraud control process, and that has to be integrated into the provider's operations because this is such a significant risk. And if we go down to the bottom, we see that the overall level of services required. There was an extensive level of services needed, not just actuarial services, but a broad range of services. You know, a really detailed institutional assessment of the institutions, some really detailed product development and training for both the microfinance institution and the insurance company, and really careful fraud management and prevention processes to be put in place. Okay, so if we go to 2A, so we already talked about the product features. Now we're talking about the provider itself. So in the provider area, there are a number of key areas. If we look at, for example, number 3, customer administration, this had a medium risk weight, but had a high risk score. And the reason it had a high risk score was because this was the first time that the MFI was launching this product, and this type of product, launching insurance, and they wanted to manage the claims in-house. So the MFI was actually learning about insurance, learning about the processes, about administering it, but also about claims management, and they wanted to take on some of the claims management themselves, which made it sort of risky in a sense, but also it would mean that they were more empowered and more feel more ownership of it. And the second thing area was about the insurance company themselves. They were only used to corporate medical insurance and had a very extensive claims verification process. So because they were working with corporate medical insurance, the coverage is very different to this product. This was a very simple per diem, hospital cash per diem product, but the insurance company was more used to sort of very comprehensive medical insurance with very detailed claims verification processes and so on. And those types of verification processes are not really relevant or useful in an inclusive insurance or microinsurance setting because they're too complicated, too expensive, and not cost effective. So it requires a significant change in mindset for the insurer to sort of think, well, actually we'll simplify things, we'll make things as simple as possible, and actually be willing to sort of hand over ownership of some of the claims administration to the MFI itself. So you can see why it's red. But this is also really important from the client's perspective. You know, claims administration, customer experience is really important in terms of making the product successful. So if we go to the bottom of this tab, we can see the overall scoring. So again, this was a red, and it was 3.26. So the product had a high score, and the provider had a high score. We saw why the product had a high score, and the provider score was high also because it was the first time the provider was doing it. They were unfamiliar with the market. They needed to make changes to their operations. They needed to learn about this client base. They needed to train their staff about how to interact with these clients. So a number of key issues to figure out. So then if we go to 3A. So no surprise, we see that the product risk assessment on the top ranges from low, moderate, medium, and high. The product risk assessment score was 3.14, and the provider risk assessment score was 3.26. So that brings us into the top right-hand corner. And so the question then is, given all these issues, given the scoring that we come up with, and if you had gone through this exercise, and you ask yourself these various questions about internal, external factors and so on, what would you do? Would you still launch this product? You have this, and this is a good way of actually having facilitated conversations and figuring out where do we want to go from here. You wouldn't really want to launch it given these issues. So then the question is, how can we resolve these issues? How can we sort of manage them and ultimately end up with sort of a less risky product, a less risky situation? And this goes back to one of the early slides at the beginning of this webinar that Jules presented, showing the steps, but it's also remember that it's an iterative process. So you follow all the steps and you come up with your score, and then you figure out actually what do we need to change to manage this and help manage these risks, and what type of services we need. And then we can go back and revisit the scoring and end up coming up with a better score. For example, if we can get extra data, if we can put in strong fraud controls, if we can train the insurance company, if we can develop a very simple claims process, we can end up changing our scoring and ultimately end up with a different aggregate score, and we get out of the red area in the map, and we end up hopefully in the yellow or the green area. And that's what you do. So this is hopefully, I've had to go through this fairly quickly, but a work example will help you think about what are the issues very, very quickly. And if you apply this tool to different situations, to different products, you'll get different issues emerging, but hopefully it'll help you identify the issues that are relevant to your situation, your product, your organization, and then figure, okay, what do we need to fix this? What do we need to manage these risks? And hopefully come up with a lower score, and ultimately trying to launch a more successful product and more sustainable business. So I'll hand back to Jules now, who will sort of facilitate the Q&A session.
Thanks, Eamon, and thanks, Henry, also for giving us the introduction. I said at the beginning it would be nice if people ask questions as they go. We've had several, but I would encourage you to continue sending in questions for the panelists to challenge them and to give better, clearer, more detailed explanations. So one of the questions that has come in is, what happens if you have criteria that you want to use that aren't listed in the spreadsheet that you gave? So Henry, you might like to take this to start with.
Thanks for the question, Jules. That is a good question, because this is an analytical framework. It's not going to be able to cover everything. What you will see is that it covers the broad areas that we're looking at. But for the product area, for example, you will see that line or number 10 is a line where if there are other things that are relevant to the product that we haven't thought of, or not because we haven't thought of them, but because they're specific to your context, either in your country, either in your product market, or because of the stage of development of the insurance market, then you obviously need to factor that in, and there is allowance for that. On the provider side, again, there's what we call number 7, where you can specify other features. So we're looking at this from a business point of view of the product and the provider's ability to manage the product. There are, of course, other things in the real world that you need to think about, for example, government relations and the market. So those types of questions are in here in step 3A, where we say, have you thought about all the risks, operational, product-wise, with your relationships with other providers, and also importantly with the customer base as well. We keep coming back to the customer because there are different elements of how the customers are affected. These questions, are there other internal factors? Are there other external factors that you need to think about? And as Eamon said, that can either, that could potentially change the risk assessment that you put from what the tool generates to what you think should be after taking account of those factors.
Thanks, Henry. Perhaps just a simple follow-up question, which is, in the places you showed to put in other factors, there was only one row. What happens if you want to put in two separate issues, or do you need to combine them together to fit in the one row?
Good question. I mean, I would say that generally you can combine them, but obviously if they are different issues, indeed, the tool, in a way that the tool where it's blue is where you need to fill it in. White, we've got it fixed, but so for example, you'll see there the white product features, we put them fixed categories, but it may be that you want to change the spreadsheet, which you're obviously entitled to do. You would need to unlock that sheet. You see down the bottom, all the sheets are locked. They're locked to make it simpler for you by focusing on the blue and less on the white. But there might be things that you need to put in. So for example, on this sheet, if there are other things that you need to think about, so factor 1, etc., then you need to, then you can add them in. So the spreadsheet it's a framework. It's designed where we thought about the multitude of situations, products, countries. It's fairly generic. It's an analytical framework, but obviously you are you can tailor this to your individual product or circumstances. That is there available for you to do. It will take a little bit of work, but it is possible.
Okay, thanks, Henry. That's useful to know. Flexibility is always handy. Another question that's come in is, will the supervisor see or need to see or be permitted to see these assessments as part of a supervisory review of products and so on?
Well, I guess that depends on the jurisdiction and your supervisor, but this is a tool to help you analyze risk, but also importantly, analyze services to address those risks, which is where the actuarial and other skills come in. I think the answer to that is, well, if it makes your regulator more comfortable that you've used this process and this tool to understand, assess the risks and the services and how you manage them, you can show them certain sheets. You don't need to show it all. But obviously, if you tell them that these certain items are more risky for you, they might ask questions. If you have a good relationship or good dialogue with your supervisor, that may not be an issue. But there may be business reasons why you don't want to disclose that you put yourself in a red score for some of these. So, for example, in Eamon's example, I think a good example is the fraud as an item here, number 7. You might want to tell the regulator that fraud is an issue and how you're dealing with it, but you don't need to show the spreadsheet for that. It's up to you. The spreadsheet is a tool to help the thought process and the analytical process, but up to you whether or not you show it to your regulator.
Okay, thank you. Eamon, there's a question here that perhaps comes back to what you said, which is, can you just clarify again what the difference between risk weights and risk scores are?
Yeah, so the risk weight is before you even think about scores, the first question is to go through the product features and the provider features and think how important ask yourself the question: how important is this feature to make this product work? For a successful product. So if for example, client awareness is a really good one to think about. The first one is ensuring good client awareness and product understanding is highly important in inclusive insurance markets to make a product work. In a more developed market, that's less the case because there is an existing level of awareness already there in the place. So other things around the reserving, for example. In this situation, the one I showed you, reserving is a feature, is a technical issue, and how complex the reserving is not very important for this product, because it's a very simple product. So the first thing is the risk weight is how important is this product feature to really making this product really work and make it a successful and sustainable product. Try and ask you those questions first, and do that first before you think about any scores, and then take a pause. And in some ways, it's good if a different person does that. A different person does the weighting versus the scores. But if that's not possible, you can do it yourself. And then the second thing is to do the scoring separately. And the scoring is really saying, how much does this feature pose as a risk, and can I manage this or not? And for the example I showed you, so for example, data availability was at a moderate risk weight, but at a very high risk score because there's very limited data. There's next to no data available in the first place.
So if I summarise it into one line, if I may, the risk weight is about how important the issue is, and the risk score is about how well you can or can't manage it.
Yeah, exactly.
Okay, so that gives you the difference. And I have one final question at the moment, which is maybe you both like to have a go at this from the different perspectives. Henry first, can you clarify how this spreadsheet and the results it produces fit in with an overall decision-making process about the product and whether to go ahead or not in the insurer, i.e. what's left to do in addition to topics that are covered in this spreadsheet, or is this all inclusive? That's Henry first.
Ideally, we would like to say it's potentially all inclusive. So I would say the steps 1 to 4 are looking at the risks of the product, risk of the provider, and the services to manage those risks. And then step 4 is the skills to provide those services. So it's risk, services, and then skills. And then from there, you think about, well, what else is there? Remember, we said in the holistic assessment, this is the automatic generation of the score, but what else do you need to think about? Internal or external, regulatory, legal, or other. So it doesn't cover everything, but it gives you a framework to think about those things that you could potentially manage. Other things that affect business environment and business decisions, they might be outside the scope of this spreadsheet. It depends on your circumstance. But even if it is outside the scope of the spreadsheet, the tool should hopefully give you the analysis and results and understanding and thinking to have that informed decision about what decision to make.
Ian, would you like to add anything to that?
That's a good explanation to what Henry said. So, it's a tool to help you figure out these issues. I mean, it doesn't explicitly cover sort of the institutional assessment and the regulatory environment that you're facing. Are you complying with the regulations? Can you really do this product, and so on? There could be other factors around the business case. What is the business case for you as an insurer to launch and develop and launch this product? The financial business case, the numbers insured, the premium volumes, and so on. But these are things that you consider when you're thinking about it from the provider perspective. but the tool is meant to cover sort of most of the product development questions and product design questions to think about. All the way from the point of when you decided you want to do this product to actually launching it. But there'll be a few sort of external factors, like Becky just said, institutional assessment, regulatory environment, and the business case that are additional to this.
Okay, well, we're very close to the end of our time with 3 minutes left. So I'll just ask Henry and then Eamon if there are any final quick comments they want to make, and then hand back to Christian for the final formal bits, and I'll make my conclusion. Well, I'll do that now so that we just make it a bit more efficient. So thank you to both Eamon and Henry for their presentations, and thank you to the participants for all joining us. And please remember the next webinar is on Thursday the 7th of February, and we look forward to seeing you back then when we'll dive into this in a little bit more detail. So thanks again for your attention, and thanks again to the presenters for a great session. So any final wrap-up comments from you, Henry or Eamon?
Just to tell people that please use the tool to give us your feedback or ask questions. You have our contact details on the presentation, which we will make available. The tool is there. You can save it. It's freely available. And think about it in your specific context. We welcome your feedback definitely on it.
I would echo that. So, like Henry said, please use it, and you'll find that once you use it, if you think about a product that you launched in the last 3 to 6 months, or you're thinking about launching in the next few months, I suggest you try and follow this process. Spend half an hour to an hour, just try and do it really quickly, and you'll find that it'll get you thinking about a number of issues that you may have thought about already or may not have thought about. So it's really the learning is in the doing, and it really becomes alive then. And that's the whole point of it. It's not a simple Excel spreadsheet that's going to solve everything, but when you use it and start using it in a real world situation, it should hopefully generate issues for you to consider and make it real and hopefully useful.
Okay, well, we're right on the money. So, Christian, handing back to you.
Okay, thank you everyone for attending, and we look forward to seeing you on February 7th. As mentioned earlier, if you wish to access the paper and the tool, they're available on the IA website. So our website is found at the bottom of the slide that you can see right now, www.actuaries.org. And if you go under publication sections called papers, you'll find the paper and the tool available right there. As participants today, you will also get a message from us, and just if you haven't yet registered for the February 7th webinar, you'll be able to do so. So I'll close this off, and thank you very much for attending. Goodbye.